I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon. Welcome to GrainTV. It's Wednesday, February 18th. We had selling pressure on the grain markets today. Corn and wheat off 6 cents a bushel, while beans took 11-cent dive today. Cody, we had news out of Egypt that really sort of shook the wheat market a little bit. What did we hear from that?
Absolutely. Let's take a look at the chart here. You'll notice that yesterday we kind of traded up right to that 100-day moving average. Then today we ended up trading lower. I think a lot of that had to do with the fact that Egypt actually, they announced a grain tender earlier this week. Today we were supposed to get results. We did see prices come in. They rejected all the tenders that were offered for U.S. wheat only, and they actually said that prices were exaggerated. They were hoping to buy U.S. wheat, but they're going to turn elsewhere for more competitive prices. That's why we saw wheat trade a little bit lower here. You can really see that since the beginning of February, we've had a little bit of a premium added to this market. And I wouldn't be surprised if we do see prices move a little bit lower here. Maybe we'll see Egypt back in the market. But as for right now here, I really think that this is going to be negative for prices. This is probably going to be negative and outweigh any sort of frost freeze threats that are coming through the week later on. We really only have about 10 to 15% of the wheat here exposed. And I don't necessarily think that we're going to have any sort of significant or violent freezes here over the week that will impact this in a meaningful way,
right.
Enough to rise prices.
And, you know, what we've always been saying, Cody, is there's plentiful supplies of global wheat right now, and we're seeing that in the lack of competitiveness in the U.S. market for wheat movement.
Absolutely. They turned right around. They offered up a tender for really global wheat. So
right.
Take a look at soybeans. This is kind of interesting here. We talked about it yesterday. We got up over $10. We kind of hit that 100-day moving average area. It was also an area that between October to January provided a lot of support here as the soybeans traded sideways. It was support. Well, we broke through that. Now we're back up in this area again. We were up over 10 last night, and we provided, it seems to be acting as a resistance. We were kind of talking about this yesterday, that it really isn't a resistance point. It's not a price point. It seems to be a very big range at this particular juncture, and I was a little bit concerned that we may see some selling pressure in today's trade. That seems to be what we got. I think what's driving soybeans going forward is the ag outlook forum. I think traders are going to be paying very close attention on the 19th and the 20th here to see if there's any sort of significant increase here in acreage numbers by the USDA.
Right. You know, traders are looking for higher bean acres and lower corn acres, and the question is really at this point, how much higher for beans, how much lower for corn? And USDA gives us our first sort of crystal ball look at that. And again, this is not survey-based. It is simply analysts sort of projecting what they think will happen. So certainly it's not any sort of final number or even really strong survey-based guesstimate. Let's take a look at a thing we like to track, and that's broiler placement, because it gives us a sense of how much feed use there is. In the last weekly report that we got out today, we had another strong week. We've been running at about 3.2% for the year, and we continue to outpace last year's broiler chick placement. So that's, you know, a good thing for corn, obviously, for feed use. You know, I think more supportive, though, really is going to be the turnaround we saw at the end of 2014 for cattle on feed and hogs and pigs. So those numbers were strong in the last part of 2014. So hopefully we will see a pickup in quarter two of the marketing year for corn use coming out in that March 31st stocks report.
So with broiler chicks here being placed, it seems to be up over last year now. We know that in the January report, the USDA revised their feed use a little bit lower here. Mm-hmm. Are you saying that, you know, there's a good chance that maybe not next month, but in the coming months here, with prices for grain the way they are, and chick placement here being positive, do you think that there's a good chance we could see that?
Well, I think there's a chance.
Increase?
Yeah, I'm not sure it's going to be a big change or a big increase, but I think there's a chance that Q2 will start to finally show improvement in feed use, because we are seeing a turnaround in the livestock inventory overall. Broilers are the first to respond. They're quick to basically respond to the lower feed prices. And finally, we're starting to see the bigger animals, the cattle on feed and the hogs on pigs, start to turn around as well. So hopefully that bodes well for better demand in the future.
Well, thanks a lot, Kevin. And if you have any questions about what we talked about today, give us a call. The number is 877-472-4607. We're going to have ethanol numbers out tomorrow. And then on Friday, we get export sales. They are delayed because of the President's holiday there. If you have any questions, again, give us a call. We'd be happy to walk you through the platform and see really how you can take advantage of the trading technology that's out there for producers. Thanks a lot. We'll see you here tomorrow.